It's Market Day Report. Here we are midday, and where are we trading? Let's start with the corn market. Corn has been under pressure today. That December contract at $4.58, it's off 6 1/4 cents. Now, the corn market's had a pretty good run this week. It's up 4%. Here's what the 5-day looks like here on that new crop for corn. So even with our pullback, you can see we've gained 15 cents since, last Thursday, right? So I got a bump up as we came back in after the long 3-day weekend, started trading early. Early on Monday morning as we reopened on Sunday night for the overnight action. You can just see we've been adding to this December corn contract. But again, we're down about 6 cents right now at $4.58. Here's what the intraday looks like. That doesn't look real good. But again, when you pull back and look at the last 5 days, tells us a slightly different story. How about the story for soybeans? You know, look where we traded when we first started back in January. Since then, we've gained 11.5%. That's $1.24 that we've added in value here to this new crop soybean contract. Now, we are in the red right now at 11.97.5. It's down a tick here. You look at the last 5 days, however, on beans, and the last 5 days, we've added over 42 cents to this contract, so it's up nearly 3.7%. That's where we trade the two big ones, corn and soybeans, right now. How about we go to New York? That's where we find Ken Zuckerberg. Ken is Director of Global Research with CHS Market Advisors. Ken, what are you watching today?
Good morning, Tony. Hope you're well. So today is one of those volatile days again, right, when it comes to both the macro and the grain sector. We had some news out of the Middle East that the ceasefire was postponed with some additional military skirmish. We have the FOMC meeting minutes coming out a little later today, and of course, all eyes on the WASDE report for Friday.
Yeah, and again, I'm glad you mentioned what's happening in the Middle East. We've obviously turned energy prices back higher, but we're not rocketing higher. What can we pull from that?
Yeah, Tony, I wish I could offer something of maybe additional value. I think as we think about this period of time, there are, have been and continue to be fits and starts, right, with respect to the negotiations, the peace process, who's saying what, who's doing what, and then what happens next, right? So as we think about it, I think energy markets are reacting to what appears to be an immediate, although temporary disruption. I think if, markets had believed that there was no hope of peace, we would have a 90 handle, if not higher, on crude. So the last time I checked on the way to the airport, we were not there yet, so that was good. I think we were mid-70s when I last checked. So, we're in a period here where hopefully in a day or two we'll have a bit more of a coming back to the table and some, more constructive negotiations. But as we talked about 2 weeks ago, if we knew exactly when this would settle, then you and I would both be on a plane going to somewhere warm for about a month or two. But unfortunately, it's that period of back and forth.
Yeah, great points there. Well, safe travels. Ken Zuckerberg, CHS Market Advisors. Break here. And more markets, including a look at what's happening in the equity markets on the heels of this disruption in the Middle East. It's all ahead on Market Day Report.